Vandana Hari of Vanda Insights to talk about exactly that. Vandana, morning. Great to have you in the studios here with us. What brings you to India first?
It's a pleasure to be here. So I'm speaking at a conference tomorrow, the RACE conference, Recycling and Circular Economy in Plastics. I'm not an expert on petrochemicals or plastics or the circular economy for that matter, but I'm going to be talking about the implications of that for the oil sector, because the oil, everybody's been talking about the end of oil. Well, not right away, but presumably in the next 10, 20 years. But if you talk to anybody in the oil sector, refiners, producers, they are banking upon growth in petrochemicals now. You know, that's the future. Population growth, urbanization, improving living standards, more packaging, plastic bottles. Oh, I don't see any plastic bottles here. But anyway, we know what we're talking about. But what if recycling and circular economy efforts actually dampen the growth in petrochemicals? So that's going to be a big worry for oil.
So in fact, talking about that, Vandana, let's talk about where we're at with regards to crude.
Yes.
You know, output cuts seems to be the buzzword, the key word, and there's a little bit of back and forth on that when it comes to OPEC, and then we've got the geopolitical concerns as well.
Yes.
So first, just paint the picture in terms of how serious you really think it is.
Okay, so all the reasons for the rally so far, and I'm just going to try and crystallize it, are valid, okay? So there's three things. That's fear, fundamentals, and euphoria. Fear as to what happens to the production of Venezuela, Libya, and fundamentals is what Venezuela, Libya, and Iran as well, of course. Fundamentals, OPEC has been tightening the market. It's been over-tightening the market. There's absolutely no doubts about that. Euphoria, I call it euphoria because I think probably it's a little bit overbought over the optimism that China and the US are going to have a trade deal. I call it euphoria because, you know, there are the question marks. You know, how much is it really going to prop up Chinese economy, and how much is it going to support Chinese oil demand growth? So these three factors, they are very supportive, but you know, not all of them are going to continue supporting the rise of crude from here. That's what I believe.
So let's talk about now where crude is at, 70. What does this mean for India?
Oh, I know. I think I'll be in trouble if I say anything, but it's bad, obviously. Look, it's not just India. Trump doesn't want high oil prices, right? That's a rich economy. None of the consuming countries want prices to go up. I mean, I think globally there is an understanding that when prices crashed back starting in 2014-15, generally it didn't really provide an impetus to the global economy, because you have to think about all the oil producing countries. A lot of them, Nigeria was on the brink of recession. A lot of Middle Eastern countries, look what happened to Saudi Arabia. They started losing their all their stash of cash. So there's everybody, I think, consumers and producers are looking for a sort of golden mean. You know, where is a good balancing point that there'll be enough investment in production, because we do need that. You know, let's face it, oil demand is not coming off a cliff, and at the same time, prices do not crimp economic growth in emerging countries like India. I think 60 to 70, in my view, is that sort of, you know, balancing zone.
So tell me, where is crude headed from here? I mean, Brent already has seen a bounce of what, 40% from the December lows? Are these elevated levels here to stay? Are crude prices going to consolidate from here? Are they going to correct? I'm hoping against hope.
Yeah, I think also when we use terms like bullish or consolidate or correct, perhaps we should qualify what does it mean, you know, for your layperson audience as well as the experts who are listening to us. Look, again, to keep it simple, there's, you know, oil markets are complex, and we could be here for the next 1 hour discussing it. To keep it simple, again, I would say for your viewers, three reasons I would give for crude not continuing to rally from here, okay? You just need to remember Trump, Putin, and the economy. So I keep mentioning Trump, but look, I'm not being facetious. The US president does not want prices to go up. Now, there's arguments as to why not, because, you know, he benefits, the shale industry benefits, US exports benefits, but I think has more of a populist approach. He's looking at what price the American drivers are paying at the pump. And as it approaches $3 a gallon mark, which is sort of like psychological level for them, he doesn't want that. So he'll continue pressuring. And it's not just tweets. Again, you know, if his tweets are not having an effect on OPEC anymore, don't think that that means prices will continue rising. He'll pick up the phone to King Salman. I mean, he just had a phone conversation with MBS, right? He has leverage on the Saudis, especially after the Khashoggi incident of last year. You know, they have to listen. And it's a lot of politics. So officially, you know, you might see the Saudi oil minister saying, no, you know, we'll do what we want to do. But who knows what goes on behind the closed doors, right?
So you're saying crude prices will be under check irrespective of what?
Yes, and exactly. And Putin, why I mentioned Putin is that Russia has become the sort of voice of moderation, the balancing force. And the Saudis, I think, are being extra bullish, extra hawkish with regard to oil prices because they're having to counterbalance Russia. And then you have the economy, of course. There's questions of economic.
Exactly. And I was just coming back to that. You know, like, no, just to come full circle to exactly, you know, you've touched upon it in a couple of your comments there. Just, you know, what is the overall expectation with regards to demand growth, where it could come from, you know, because that's also going to impact perhaps the politics, if not the price, going forward.
Absolutely. I think demand is a very big question, irrespective of what, I mean, presumably the US-China trade deal will go ahead. I fully expect a lot of that optimism has already been factored into the stock market as well as into crude. But I wouldn't be surprised to see another rally, you know, both in stock markets. Generally, there'll be a feel-good factor when the deal is actually signed. I think the question from there on is, you know, how much of a fillip is that going to give to the Chinese economy? Will it remove all the headwinds to Chinese economic growth? I don't think so. Chinese economic growth had been slowing down. There was deceleration even before the tariffs war. And that looks like, you know, from all the experts, people I speak to who do business in China, who are based in China, and the view from the ground. So again, you have to be careful, you know, not that there's a political view from Beijing. The view from the ground is that China is in a lot of trouble. So look, Chinese oil demand is still the single biggest contributor to global oil demand growth. It will remain so. But the worry here over global oil demand growth is if Chinese growth is moderating, you know, how much, yes, Indian growth is there as well, but let's compare. China consumes close to 12 million barrels per day. India is close to a third of that. So in absolute terms, India growing even at 4.4% is not adding that much. So these are very real concerns. China is also cracking down on debt. It's cracking down on pollution, which is closing a lot of you know, factories, industrial, you know, smaller companies, which
crude consumers.
Exactly. So Chinese oil demand may grow 3%, you know, which is it's a strong growth compared with the rest of the world, but it's not as strong as we've seen in the previous several years.
You know, we've spoken about the US extensively, then there's OPEC, and they've been going ahead and cutting output. What is your expectations now from OPEC in the June meet?
Yes, very interesting. So the new dynamics that we have seen emerge since last month, there was a ministerial monitoring committee where both the Saudi and the Russian oil ministers were present, and the oil market focus zeroed in quite a bit on the differences in their outlook. Look, I think I wouldn't make too much of that, and I certainly wouldn't say that that means that the group is going to split up. I keep saying, and I'll say it again, I think it bears repetition, that I think the collaboration, the cooperation is here to stay, okay? All the producers within OPEC as well as the non-OPEC allies have seen the difference to their economies, their revenues between 2014, 15, 16, and what happened after 2017. So that's here to stay. However, it seems to me that the Saudis have become a bit hawkish. They want prices on the higher side. Not their production costs are fantastically low, okay, but their budget price is way higher. So they want, you know, some say 70, 80, but that's the sort of ballpark the Saudis would like. The Russians can make do. Theirs is a much more diversified economy, much less dependent on oil. They can make do with lower prices. And even back in 2017, when Brent started first climbing into the 60s as a result of the cuts, the Russian oil companies were, you know, knocking on the doors of the oil minister and saying, let's just get out of it. We are happy. $60 is good enough for us. Let's just get out of it. Importantly, Russia did not get out of it. Okay, the Saudis and the Russians are collaborating far beyond oil. It's a very strong commercial, political partnership. So that will continue.
Talking about politics, I just want to get your view in, Vandana, since you're visiting at a time when there is, I don't know whether to call it chaos or excitement or. But what's the mood overseas? How closely are people watching these elections? What are you expecting?
Right. So I will speak completely from the point of view of the oil market. Okay. A lot of analysts and just generally people looking at the oil world have actually set aside China. You know, from the start of the century, the first decade or so, it was all about China. Now everybody in oil talks about India, you know, because they realize that in terms of quantum of consumption, yes, India is still a fraction of China, but Indian rate of growth, not the economy, the economy is doing quite well as well, but the Indian rate of oil demand growth has everyone excited. Now, a couple of things I would like to mention here is, first of all, and again, something that bears repetition, though I might have said it before, is that India really stands out in how it has gotten rid of fuel subsidies over the past 4 years. So when the current government last came to power at a very opportune moment, 2014, right when the prices were crashing, so the subsidized prices became the same as market prices, and you know, that's always the best opportunity. I look at some other countries in the region, you look at Indonesia, Malaysia, to some extent Vietnam, Thailand, they are still, you know, like 2 steps forward, 1 step back. So the way I think that the government in India just completely removed, for all practical purposes, they're gone, right? I know there's a little bit of selective subsidies on LPG, which I think is good. So that is fantastic. Very importantly, that has not hit Indian demand growth, right? So people are consuming, people were, and that proves wrong a lot of previous theories that the population, the country will not be able to take market-linked prices. So that's, I think that's wonderful.
Okay, Vandana, great to have you in our